Bismillahirrahmanirrahim. I'm Majidullah. The subject is Principle of Auditing. That is first lecture, Introduction to Audit. Today, teaching agenda for today lecture is what is an audit, essential features of an audit, why there is a need for an audit. Moving further, what is an audit? Audit is an independent examination. That is, first term is independent examination of financial statement. These financial statement are three statement: cash flow, balance sheet, and income statement. Audit is an independent examination of financial statement of any entity. Entity means company, that enables an auditor to express an opinion about these financial statement, whether the financial statement are prepared in all material respect. That is, materiality concepts will be discussed later, in accordance with identified acceptable financial reporting framework. In Pakistan, financial reporting framework is International Standards of Financial Reporting and Company Ordinance 1984. So it is an independent examination of what? Financial statement of an entity, that enable the auditor to express an opinion whether the financial statement are prepared in all material respect in accordance with an identified and acceptable financial reporting framework. Financial reporting framework in Pakistan means International Accounting Standard, International Financial Reporting Standards, and International Federation of Accounting Ethical Codes, Company Ordinance 1984, Banking Company Ordinance 1962. This view of audit is presented by International Standards on Auditing 200, objective and general principle governing an audit of financial statement. The word used to express audit opinion means that the financial statement gave true and fair view. True and fair view of what? That it is in accordance what the financial statement said. These financial statements are prepared according to the financial reporting framework, and it presents what the management said. So it is an opinion of the auditor, or have presented fairly in all material respects. Means there is not if there is any minor issue, it would not affect the economic decisions of the user of financial statement. So below the materiality level, the financial statement are present a true and fair view. The true and fair view presentation means that financial statements are prepared and presented in accordance with the requirement of applicable international financial reporting standard and company ordinance. Local legislation means company ordinance, banking ordinance, banking company ordinance 1962. Moving further, essential feature of the audit. It is management responsibility to prepare financial statement. Financial statement should be prepared in accordance with International Accounting Standard, International Financial Reporting Standard, and Company Ordinance 1984. What is then auditor responsibility? Auditor responsibility is to examine the financial statement, that either it present a true and fair view in all material respect, and the financial statement are prepared in accordance with the financial reporting framework that is applicable in Pakistan. What is the benefit of auditing process? Financial statements are prepared by management. Now these financial statements are prepared for investor. Investor means the shareholder, present shareholder, as well as to the prospective shareholder. So shareholders, either as current or as prospective shareholder or any other user of financial statement, read these financial statement for certain decision making. So an independent auditor opinion will enhance the reliability and integrity of the financial statement. So this independent view will enhance the integrity of financial statement. It will also assist the user of financial statement to take economic decision in a more convenient way. So the true and fair view, which we already discussed, is depend on certain judgment. So auditing process is therefore rely heavily on professional judgment. It is not solely on the basis of the fact that are written in the book of the accounts. The auditor opinion make reference to true and fair view. This true and fair view, not a real fair presentation, but again a matter of judgment. So the auditor never said that it is a true and fair view. It is according to our judgment, the financial statement give a true and fair view. So the true and fair view is again a matter of judgment itself. Independence of the auditor is mandatory. Why? Because independent auditor, when independently examine the financial statement, in this case only it will increase the reliability of the company. Management, since you prepare the financial statement for external shareholder or other stakeholders, so there is agency conflict and people do not believe in what the management says. So independent auditor will increase its reliability and integrity what they are going to report in financial statement. Going further, need for auditing. Why there is a need for an audit? Continuing. The problem has always existed at the time when manager reports to the owner, is that whether owner will believe in the report or not. This is because of the report may contain error, not disclose a fraud that are committed by any senior management, unintentional or inadvertently misleading informations, deliberately misleading informations, fail to disclose relevant information, or fail to conform that to the regulation. These are some issues that owners or the shareholders always susceptible about the management. That management may not reveal these all issues in the financial statement. Why there is a need for audit? Need for an audit because, as we earlier mentioned, that it is the responsibility of the management to prepare a financial statement according to applicable financial framework in Pakistan. It should be according to the International Financial Reporting Standard and Company Ordinance 1984 or Banking Company Ordinance in 1962. So if a management prepare the financial statement, the external user will not believe in these financial statement. So audit increase the credibility in reports and accounts lies in appointing an independent person called an auditor to examine the financial statement and report on his finding. The preparation of accounts of large companies is very complex operation involving bringing together, summarizing of account of subsidiaries. It means the company have a subsidiaries with different convention. Maybe it may be different legal system because the company may have a subsidiary in different country, and accounting and control system. So the auditor, an independent person should be needed in order to understand this complex nature of accounting system, this complex nature of financial system, this complex nature of legal system, and as professional judgment on the financial report provided by the management will increase will increase the reliability and integrity of the financial reports, and it will assist the shareholder or other stakeholder to make any decision basis on this report. Moving further, examination of such accounts by independent experts who are trained in assessment of financial information is of benefit to those who control and operate such organization, as well as to the owner and outsiders. So this complex nature of organization, when examined by the auditor, it also provides help to the management as well. If there is any weaknesses in the system or loopholes in the system that are unintentionally occurring in the system, and the management was unaware of these weaknesses, so it will help management to control and operate the company in efficient and effective manner. Many financial statements must conform to the statutory means legal requirement of the company. All companies' accounts have to conform to the requirement of Company Ordinance 1984. All accounts should conform to the requirement of International Financial Standard. So all shareholders are not so competent to achieve this objective. So it is essential that an audit of financial statement should be carried out to ensure that they are in conformity or in compliance with these requirement or not. Thank you. This is about today's lecture.